All right, hey everyone. Welcome to our second show of the day on the Financial Summit YouTube channel. Mark reached out to me. We haven't done a show in a while, and Mark, nice new background as well. And Mark is like, "Hey, Tone, it's an all-time high. Let's just do a show. We haven't done one in forever." And I just came off of Simply Bitcoin. I was on Simply Bitcoin for the last hour. This is like, I guess, podcasting day for me. And Mark, let's talk Bitcoin price. Floor is yours. I'm going to let you drive this. Tell us what's going on. I guess let's do the short picture first.
Okay.
Uh, Tell us what you're thinking here on the short term. It was nice to see a new all-time high an hour ago. We have now pulled back quite a bit, but we're still sitting at 107,000, which is higher than the highest daily close of all time. So no one should be complaining. All right, Mark, feel free to go screen share. And oh, wait, one more thing.
Yep.
Unconfiscatable will take place on May 30th. May 30th in Las Vegas. The poker game is sold out at 50 players, but you can come and spend the entire day with us at the Nerd. Information on the website.
Nice. So much fun. I'll share my screen. So Tone and I haven't really gotten together. He's been in Asia, and I'm on the East Coast in the DC area, and we're like 13 hours apart sometimes. So I wasn't even sure where he was, but he's back on my time zone. So we decided to just hop on real quick and take a look at what's going on. So Tone, I didn't see your stream this morning, but I did check out the thumbnail and I saw the thing that said new all-time high this week. So I'm assuming you and Matt were looking for the price to poke above a new all-time high.
Yeah, we were. We definitely were. We've been talking about it our last few shows, and we did this show before the all-time high happened. But it happened very soon after.
Okay, so really quick, let me just show you what I've been watching. A couple of things. I've been pretty certain that it was going to hit a new all-time high as well. I've been posting on X a little bit more than I normally do, and not to toot my own horn, but my calls have been pretty accurate. I called a pretty nice top on the S&P before the insanity, pretty nice top on gold, and some pretty good BTC calls just using simple TA and a lot of MRI. Man, that the tone-based MRI has been crushing it lately. I'm not here to plug the MRI, but I would suggest anyone who has any interest in kind of getting out of the dark a little bit and learning more and more about TA, it's worth it. It's an incredible indicator. But we can see here without any need for the MRI or anything. I'm just using the simple Bollinger Bands, which I love. Right, let me zoom in a little bit more. This week right here, April 21, we finally got a settled close above the median of the Bollinger Bands. So this is one thing I was watching because I was seeing the price action very similar to back here in 2024, particularly in July, which saw a nice strong rally. I've been anticipating this rally at least up to 95K for many, many months. I off of the recent lows in 70K. I thought for sure 95K was coming. But we can see here why waiting for settled closes is so important, because in July, we got a strong rally from 55K up to 70K basically, but it was still a lower high. It was still nothing but a lower high, and we only got two closes settled above the middle band and then a huge sell-off and lower lows. So I was very cautious after this candle here, which is it was the second close above in April 28th that week, because you can see a strong wick to the top, which shows us a lot of selling, and this could very easily have turned out to be a candle something like this and reversed. But when this next candle did not sell off in the third week, then I started to get bullish, and at that point when the price was probably breaking 97K is when I started to look up at the top band. So I started kind of looking for the new all-time highs in the mid 90Ks. And I'm going to add one magic moving average to this, which is now showing us momentum on the weekly. So this is just simply the 21 EMA, which we all know very much about now, Fibonacci number. And let me just show how important it is to get the 21 EMA crossed back above the median. My median on the Bollinger Bands, I set it to 18. The default is 20. I just prefer 18. There's subtle differences, and sometimes I toggle back and forth between the two. Regardless, it's a small difference, but let's just take a look at the last few times in recent history where the 21 crossed back above the median. First time was October 2023, and then what I look for after that cross is a close above the top band, and that is a signal for potential major expansion, which from that signal at 37K until the first major high, we saw a move up to $49,000. So that was a really strong signal. And then a sell-off. And this signal right here, when it crossed back above, this is one of the rare times when you're going to get the signal basically at the highs. And this was kind of a bull trap area. I was very bullish in March of 2024, but that high began this months-long consolidation. So now we're finally back to getting this potential signal again, which if we can see a weekly close above the top band at 110K, which is climbing at this point, I will begin to look for something similar to what we saw here in October 2024 after we got the cross back above and back here in 2023. There is a remote chance that we're kind of looking at a triple top here. And this is our high, and we go back down, but that is not at all what I'm looking at or what I'm seeing in the markets right now. I'm bullish, looking for new highs in the S&P, in the NASDAQ. And of course, we just hit it in BTC. Tone, do you have any opinions on whether or not the S&P is done, going to turn around to new lows, or do you think it's trending to new highs?
And Mark, my computer is really, really lagging.
Yeah.
So that's why it's a bit of a pain in the ass. I think S&P is going to go to new highs.
Yeah.
Again, as long as Trump doesn't do something stupid again, like he did with the tariffs. And I don't know why people continue to get so angry when I was saying how disappointed I was in the Trump administration and the stupidity they were doing to crash the stock market. And I was 100% right. And once they stopped doing the stupidity, the stock market recovered. So as long as Trump doesn't do anything stupid, the stock market should go to new highs.
I agree. And you know what? We're not going to go into it now, but I could debate you on the idea that the tariffs were just a tool to correct the markets. And I've had some discussions with people about this, only because, let me see here really quick. Let me just go to my Twitter page. If I can find, okay, here it is. Okay. So here's a tweet I posted on X on March 4th. Okay, we're going to take a look at this chart right now because it's actually very interesting. But I said on March 4th, the news will be what it is. Ignore it. Learn TA. S&P has seen 4 new all-time highs since November, with the daily RSI printing lower highs, showing us bearish divergence and barely 4% corrections. So this was telling me straight away that at minimum, a 10 to 15% correction is due based purely on technicals. Now, what I did not disclose is that my opinion at this time in early March was that the S&P was going to correct somewhere between 20 and 35% based on the amount of divergence up on high time frames that was then fully confirmed. So the way that I view things is that once the technicals are in place and it's very clear to Wall Street traders and big institutional traders who actually understand technical analysis, then we start looking for crazy news to either move the market to the upside at support or push the markets down after highs are confirmed. And that's exactly what we got. We got insane tariff news, which, yes, it whipped people's emotions into a frenzy and it got the stock market dropped. But in my opinion, this is just my opinion, man, we got this 20% correction over with as quick as you could hope for. And then one other thing I would like to say on this, and I will drop it, is we did have, let me go to the S&P really quick. We did have I'm calling it the drop that never happened. So if I pull up the S&P here, I found this to be interesting. So I started getting texts and whatnot from people kind of panicking right here, like literally around the begin. Well, here was my tweet on March 3rd, and look what happened. It was a totally accurate call looking for a strong drop. But even after about a 5% drop in the stock market, I started getting tweet or messages from people panicking, thinking that Trump was going to destroy the economy and the stock market is dead. And I was like, okay, well, what about what happened here in between 2022 and 2023? And if we look, I probably have drawings on this already. Let me see. Yeah, I do. Okay, if we look, that was a 27% drop right there. That took 722 days to get back to the all-time high. 722 days. It took several months to get to the lows. The reason, in my opinion, that this unfolded like this is, well, here is the divergence we had. I've got it marked. If I put on the RSI, we can see we've got lower highs in the RSI. I'm on the weekly chart here. We've got a couple of drives to higher highs. We've got an M top. Yeah, it was going to correct. But there was no news, real news, to drive the prices lower, because I don't want to get too political, but Biden was the good guy, and there's no way the market could crash when the good guy's in office, even though this correction was bigger than what we just saw. This was 7% larger than what we just saw, and now we're looking at the S&P almost back to its new all-time highs, and I'm going to show you why I believe it's pausing right now. So anyway, Tone, that was a diatribe, a long diatribe on me saying, yeah, for sure the tariffs disturb the markets. But in my opinion, all of the fear that was injected over those weeks got this correction happening so much quicker. And I do believe that it's possible for the S&P to be at new all-time highs by the summer. I'm going to say maybe by July or August. Now, I do have a Fibonacci drawn on here. This is a Fibonacci taken from this all-time high at 61.45, and I went down to the wick. Sometimes I won't go down to the wick, but this is down to the wick at 48. 0.866 retrace is huge. That is one of the most important retrace Fibonacci's. And you would think that after you've retraced 88% of the drop, that it would be a no-brainer, that we would be moving to new all-time highs. But we can see that the S&P has sold off in this 59.85 range for a few weeks. So I am not surprised at all to see the price stalling right here. This might be the top for the S&P for a while, and then maybe looking for a higher low, and then off we go. Now, I have a theory. If I go onto the daily chart, the S&P put in this W bottom, which kind of looks like a V bottom on the weekly chart, with a bit of kind of a inverted head and shoulders ish, and I'm targeting 6,400 for the S&P. This is based on a theory that Bitcoin is leading the market indexes right now. NASDAQ, Dow, QQQ. And I also believe that gold has been leading Bitcoin. And gold is telling me that Bitcoin is going to around 135,000. This is based on some Fibonacci extensions we can look in on. Any opinions or ideas on my BS ideas, Tom?
No, look, everything is good. I don't know why you turned off your charts, but
well, you know what? I'm having a hard time. Hold on, I want to show one really cool chart. I'll show you why I was looking so strongly at a big correction. But before I do that, let's switch back to BTC really quickly. And I want to show why I still love the 4-day or the 5-day chart for Consensio. And I think I saw Tone say he's not using it quite as much anymore. I can understand why. However, the last 3 signals that went bullish, I've done the math on this. I can't remember what the averages are, but here's a signal that went bullish. And if I cheat a little bit, I could go off of these highs, which were at 23,000 when it kind of went bullish. But I'll cheat a little bit and get this dip. So this bullish signal gave us a move from 19,000 up to the highs of around $31,000. So do I have drawings on there? I don't. So that is about a 58% move. And if I'm going from when the signal came, it's still 35% move. That's pretty good. The second signal came right here in late December around 45K, which saw a move up to 70K. And the third signal came right here in October, early October at around 65K, took price up. But here is the more important thing. Here's the more important thing. We got an incredible sell signal, and Tyler Jenks didn't talk about this very much with Consensio. He had a different way of using it when he was scaling out. But right here, the week, let me zoom this in. The week of early March, right when I put up my tweet about the stock market probably topping as well. We've got all the moving averages crossed bearish. And instead of selling, Tyler would usually exit 25%, 30% on that signal. Instead of selling down here at 85K or even at 80K, if you're a little bit patient after a big drop like this, that basically took the price from 88,000 down to 78,000, a $10,000 drop, you are going to see a bounce, most likely. Not guaranteed, but most likely. So Consensio gave an absolutely perfect sell / take profit signal right here at $95,000, and you got one more chance as it bounced into the blue moving average at $92,000, and you could have fully exited, being only a few percentage points off the top, which is you're never going to get the top unless you're averaging out. But that's a 15% drop off the top, which you're not going to get a better sell signal off of a big move than that. So here we are with Consensio being bullish again. Now, in theory, Tyler would wait for the black moving average to start curling up. In theory, it is curling up. It's flat, but it is moving up. So I kind of front ran this and started seeing a buy signal around $102,000, $103,000. And so far, it's been an accurate call. However, what I'm looking for is a top to this move and then a dip down somewhere between mid 90Ks and probably 100K. And that hopefully, statistically, should be a higher low off of these lows. That should then help Bitcoin really push above these this $110,000 resistance. So as we can see here, if I go to the daily chart, we're getting a bit of a shooting star top on the daily candle. We'll have to see. There's 5 hours left, but the CME will close the day a little bit earlier. That could be it for the move. We'll see. I'm not convinced that it is, but we're coming into some timing where I would be looking for a top anyways around the next week. If we put the MRI on, current candle is a green 4. Okay. I have found a pattern in the market sometimes where the 4 candles will reverse the count instead of waiting for the 9. Sometimes a green 4 or a red 4 can find highs or lows. So this is a pivotal day. But really quick, let me jump to the S&P because let me get on the S&P weekly. And we don't need the MRI. And I'm going to add a few moving averages. Oh no, actually, I have that on. Well, first of all, let us actually take a look at Consensio. Now, Tyler would use weekly on Consensio, and in traditional markets, I do think it works. However, I have found that 4-day and 5-day, even in the traditional markets, can sometimes give you a little bit earlier signal than the weekly. But right now, the signals are all about the same. So let's just go to weekly. We're just now seeing, if I zoom in, we're just now seeing the intermediate moving average cross above. So Tyler would be out. Tyler would be on the sidelines. He would be waiting to see more strength in the markets. He's going to be super patient. Probably wasn't even trying to buy these lows down here, which I love to do. And really is going to be out for several more weeks because in order to get Consensio bullish, we need this gray moving average crossed above, and then the blue will probably cross above, projecting maybe mid to late June. So if this area can be established as support, there is a large gap here in 5,600 that I could see the price coming back down higher low and then moving to new highs late July into August. That is kind of my projection. So Tone, I've got a quick question just regarding the platform. If I want to switch tabs, how can I do that instead of just stopping sharing and opening up a new tab?
Oh, you should share the window.
Okay.
You're probably sharing a tab instead of sharing a window.
I am. Well, let me go really quick. We'll take a look at this. Okay. So this is something similar to Consensio, which I've shown before. Let me get rid of the drawings.
I think you're still sharing a tab.
I am still sharing a tab.
So why don't you just share a window?
I will. Okay, so this system, I need to remove 2 moving averages. This is just a simple Heikinashi tool. 2 moving averages, 12 and 26, which those might be derived from like MACD moving averages. I'm not sure. And just Heikinashi candles, very simple. You wait for the red to cross back above the black, and you wait for a green candle close, and then you start entering. So this system is also waiting on the S&P. I am on the 4-day chart. The weekly is probably very similar. Yeah, there's very little difference right now. But we can see that this has worked very well on the S&P going back for the past several years. But what I find interesting is when I add 2 moving averages, I'm going to add 1 more moving average. I need the 128, which we can look at. But for right now, We can see the price cradled. There was only one close below this blue moving average, which I have set up as an EMA. And it is the 89 EMA. Okay, which why 89 EMA? It's a Fibonacci number, and it's an EMA moving average that the markets absolutely love. It's kind of like it's an area that will hold the prices, and if lost, you have to start looking back down to the 200 simple moving average. So as we can see right here, we have this one panic week. To me, this week in April 7th felt like COVID capitulation emotions. Very, 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 very similar. Plus, the VIX spiked very similar, the volatility index. I was feeling fairly confident that this week of April 7th was probably going to be the lows. Maybe one more downturn to contest the 200 moving average and get divergence, but it didn't get front run. When I add what would be the 128 SMA, which that is the moving average that I've learned from Tone Base. It's not one that I would track very often, but I watch it very closely now, especially in relation to the 200 SMA, because it can give you a lot of really good information. I don't have it on this particular chart, but 128 SMA bottomed this market perfectly. So let me show what I was watching, and one of the reasons why I was so confident that the S&P was cooked for a while. So the purple bars here are basically time spent above the weekly 200 simple moving average. So from October 11, 2011 to February 16, years it spent without testing it. And even when it tested it, it was only a 14% drop. But that is because I have 1, 2, 3, 4, 5, 6, 7, 8 very small corrections along the way. So those little corrections were enough. But once it ran out of steam and created some divergence, we got this 15% move down. Then that was 1,582 days, as I'm showing right here at circling. Then from that timing, it was 1,057 days before the simple moving average was tested again, and that got a 20% drop. Then we had a little 440-day move into COVID. That was a shorter period of time. However, we did reset another count of the 200 simple moving average getting tested in mid-March 2020. Now, from that test, it was 938 days until the drop that never happened, that was 27%, took place. And we got a test of the 200 simple moving average. So that reset our timing again. So as this divergence was forming, when I put on the RSI, we can see lower high, lower high, lower high. We started printing lower highs starting in March of 2024. It was a year long of divergence that was getting set up. And this is the reason that I was feeling very strong that the stock market needed at minimum 15%, but I really felt it was going to be 20 to 35%. So it was 930 days since the 200 moving average was tested with all of this divergence in place. To me, along with so many signals from the MRI, there were so many high counts and MRI resistance acceleration zones on the monthly and the 2-month chart. It was one of the most clear tops that I've ever seen. The other thing I will look at also is how far off of the 200 moving average is the price. And we can see here that the price was almost 35% off of the moving average after almost 1,000 days had passed. This particular top right here was with the price sitting 45% above the 200 moving average. So sometimes you could just use simple timings, like how long has it been since a major correction and how far above a key moving average is the price currently. So as I'm seeing things right now, if I take off the drawings, we are going to get a buy signal into the S&P probably at the beginning of next week. I would wait for one more week to confirm. I want to see the cross and then another close after the cross. But this is another bit of information suggesting that these are the lows and the S&P is going to move to new all-time highs. So let me try to share my window here. Okay, so Tone, check this out. I'm curious to get your opinion. Tone and I have talked about this on recent streams. So I'm on the 2-month chart. I have to use a super high time frame. This is a 100-year channel that is connecting the 1929 stock market top to the .com era stock market top to this latest stock market top through the years. And if we were going to see a major correction, it would have been, in my opinion, off of this top, and it would have been a 50% correction back down to the median. But that's just not what we're seeing. The 2-month chart, when I zoom in, we're gonna see a huge reversal candle. So Tone, you and I have discussed the S&P breaking above this channel and making a move closer to $8,000, $9,000, $10,000. My question is, do you still have those same opinions?
Yeah.
And if I zoom in, we can see that basically above a new all-time high, basically above 6150, let's just call it 6200, is going to start pulling price out of this range. Now, it's possible that it just crawls up here through Trump's term. Now, if you see here, I've got this green shaded area signaling 49%, 50%. The reason is because I have kind of taken an average of post-election moves that the stock market has done for each president, going back just the last few presidents. I would say, I guess I probably did this going back to G.W. Bush's second term. We had 39%, 22%, 50%, 70%, 72%. So what I am projecting, and this is speculative with a little bit of historical data included, is the stock market to be sitting close to $9,000 at the end of Trump's term. Agree or disagree, Tone?
That sounds very reasonable.
Very reasonable. Yeah, I don't even think that is actually that's an average of the smaller of the moves, because these last two moves have been 70 and 72%. So I try to keep these projections conservative, and I do have to say they are purely speculative at best, but there is a lot. I do spend a lot of time looking back at the historical data to try to get these ideas. And I also look at high time frames, monthly, 2-month, quarterly, to really see where the direction is going. So let me go back to this tab, because one of the things I wanted to show to the viewers today, I'm going to go back onto Bitcoin, is why this time is different. Because we got death, bear market, full-on bear market signals that have confirmed Bitcoin going into a bear market every single time they have confirmed throughout history. I'm going to show one right now, and this is my EMA SMA, one of my EMA SMA systems. What we are looking at is the 200 EMA, which is the purple moving average, and the 200 SMA, which is the black moving average, and I'm specifically on the 2-day chart. So let me just zoom this whole chart out, and we can see that going back through history, every time this cross has happened, in 2011, it could be debated that it wasn't a bear market. However, this was a 90% drop or higher. So bear market in 2011. Here's the cross, August 24th. Let me zoom in so we can get a better look at it. Bear market confirmed. It confirms once the moving averages cross and either the purple or the black get confirmed as resistance. As we can see right here, several attempts, 1, 2, 3, 4, 5, 6, 7, 8 attempts to try to pick this up as support. This is at $300 in 2014. Denied. Bear market, thank you very much. And then what I look for getting out of the bear markets is the bullish cross. So as I wasn't into Bitcoin, I wasn't looking at charts. However, if I had been in 2015, right here in mid-September 2015, I would have been super bullish with the price at $230 and these higher lows forming. I would have been wanting to buy anything I possibly could in this range, because at minimum, the price was very likely going to get pulled up to at least $300. But let me move forward through history. Here's the beautiful 2017 run. And bam, here's the cross, bearish cross. And we've got a very significant try to get back to bullish. This is the timing of July 2018. 1, 2, 3, 4, 5 candles. That's all, 10 days. That's all that could sustain above the 200 simple moving average. Once these moving averages cross bearish, the rest was history. Confirm 200 EMA is resistance. Descending triangle, slam. Okay. Same thing happened during COVID. Same thing happened in 2021. Right here at the all-time high, we were getting the bearish cross. And here's the TA unfolding. You lose the 200. You try to pick up the EMA. You try one more time in March of 2022 at $47,000. Rejection, 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 rejection. Bear market confirmed. And we can very clearly see what happened after that. So moving forward, the reason this time is different is because it's very difficult to see. However, when I zoom in, we got that cross right here. This is the first time this bearish cross has confirmed, and we've seen new all-time highs. And I bought this area. I actually literally bought these lows almost perfectly based on another cross and some other. Even though my opinion was that the price was probably going lower, because I was at this point in April, early April, starting to look at the weekly 200 in the 50Ks. However, TA says that the first test of this cross is very likely going to produce at the very least a decent bounce. So I did make a spot buy. That was my last largest spot buy at 75K right there. And then very quickly, now we have these moving averages crossed bullish again. The other one I wanted to show was the 55s and 55s. That's one of the ones that Tone likes. And we've got that bearish cross. Well, first of all, let's just look at the 2-day chart right now. We've got a fresh cross on that. The last time we got a fresh cross of these moving averages was September 2024. We can see the price got pulled strong into the cross. I still would not rule out a drop somewhere into this range, into the mid 90s, maybe even low 90s. I don't think it's going to drop this low to 91K, but it is possible. That should be a buying opportunity, not financial advice. Now, This last cross, once it confirmed and we got a drop, that was October 7th, 2024. We saw $62,000 basically straight up to 75K and then straight up again to 100K. So this is telling us we have fresh bullish momentum on the time frame, which also the 200 crosses that I just showed you was telling us as well. However, let me go to, I believe it was the 3-day. Yes, it was a 3-day chart. Okay, so here's the bearish cross right here. On this one, this has not pulled us into a bear market every single time. However, it is something to watch, especially. Oh, here it is. This is a time frame. This is a time frame that I used to love to watch for the Lucid SAR. It was so good, 8-day time frame. If I put on the Lucid SARs, man, it was really, really good all through 27. It gets whipped around a lot now. However, I'm going to take these off. We're going to take a look at this. This has also been the 100% guaranteed bear market signal that we've gotten. Right here, we got the bearish cross. This is the light green 55 EMA crossing below the dark green 55 SMA. And that was December 2011. Bear market, lows are in, off we go. Here's the cross bearish in September 14 at a price range of around $470. All you have to do at that point is confirm one of these moving averages as resistance, and you're in a full-on bear market. Moving forward to after the 20K top, we've got the bearish cross right here, June 2018. One heroic effort to try to sustain a few weeks above, but we could only sustain 2 candle closes above the dark green, then confirm this as resistance and collapse. So moving ahead to 2021, same thing. And I'm going to show why I bought this drop. It was very clear in December of 2021 that these moving averages were going to cross bearish. However, it still produced a bounce of 25%. So, but as we can see, the averages cross bearish, confirm as resistance, 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 collapse. So we got this cross at the same timing of the 2-day cross, and I bought that dip right there, literally the absolute low, and it was based on those 2 moving average crosses. And as we can see, on May 9th, we've got these moving averages cross back bullish again. So that is telling me we have fresh momentum, fresh bullish momentum on the time frame. That basically, let's just call it the weekly time frame, which is suggesting that we are still in the very, very, very early stages of perhaps the last phase of this bullish uptrend. I've looked at some TA on high time frames and averages that suggest to me that the price doubling from $90,000 is not unreasonable. Do you have any opinions on that, Tone? Basically,
no. Like you said, I like this 55 over 55, and you were very, very concerned over this for a while.
Yes, I saw that happening, and I was looking this period in early April was looking very, very similar to December 2021. We had like a slightly higher high, which did create some divergence. There is bearish divergence there. We've got a lower high on the RSI, and we've got that bearish moving average cross. So yes, I was cautiously bearish. However, there were other things I was looking at telling me that this wasn't going to get pulled into a bear market. I did not have a high level of confidence that this signal was going to hold. But what I find interesting is this is the first time. Like, we always kind of joke around and say, this time is different. This time is different. This time is legitimately different. And the TA shows us that very, very clearly, because this is the very first time that we've ever seen a new all-time high in the price after confirming these bearish signals on decently high time frames. Now, I have a reasoning for this. I've looked at these crosses in traditional markets on similar time frames, and they don't pull the asset into full-on 80% bear markets. They can be super effective. They can drop an asset 35 to 40% in the stock market. And I'm talking about Apple. I'm talking about very, very large cap stocks, which I guess could be considered a bear market, but not really. It just pulls it down to really key support. The point being, I am starting to see signs of Bitcoin maturing as an asset. I'm talking specifically about the spot chart, but it also applies to CME in a couple of different ways. And this is one of the ways where I was thinking to myself, okay, if Bitcoin is maturing and sitting close to $2 trillion market cap, as some of these higher cap stocks like Apple and Microsoft and Google and Amazon, then it is possible to withstand a super bearish signal like this and not absolutely collapse. And my theory is holding true on that so far. The other thing that I'm noticing is the CME chart is starting to close gaps with wicks, which I like. The stock market closes gaps with wicks all the time. All it needs sometimes is just to touch the wicks, and it's good to go. Historically, up until probably 2024, the gaps would get filled with full body closes, whole daily candles closing below the gap. But if we look here, this is a really nice gap formed in November 8, 2024 at $77,000. I have a rule with gaps. If it's not filled by Tuesday, I don't even care about it. I just completely let it go. But I do expect most gaps to fill early in the week, Sunday or Monday. But if we look, this gap that was created in November 2024 absolutely did get filled. It took several months later. So you can't just sit there and say, oh, well, Bitcoin can't go higher because it's got this gap. Absolutely, it can go higher, but it also can fill as it did right here, almost actually with a full candle body on April 8th, right down there. So there is one gap at $91,000 that I have sitting on the back burner. Do I expect the price to go to 91,000? No. Can the price go to 91,000? Hell yes. And we can take
hey Mark, we gotta finish up, but can you give a bigger analysis? Like, what are you looking for in this bull market, and what are your timelines, right? Like what are you anticipating in a month? What are you anticipating in 3 months? And when do you think this bull market can top, and at what price?
Got it. Absolutely. So really quick, I will go to the weekly, and I'll just stay on the CME chart for now. I will only use the 21 EMA and the middle Bollinger Band, and we're going to look for the dip zone. Remember, I said the gap is at $91,000. Here is the dip zone. This is the deep discount dip zone, right in the 93K range. So can we get a wick down and fill that gap? Yeah, absolutely we can. I'm not actually anticipating that to be the case. I'm not really super concerned about that gap at 91K, but I do see it as possible. So as far as what I am anticipating, I haven't changed. Well, first of all, let's take a look at RSI on higher time frames. I'm on the 2-week chart. The RSI is reading at 68. So much room. Okay. There is a bit of a trend line. And this is one of the reasons, Tone, what I'm looking at right now will help explain why I think the price doubling is possibly maybe a little bit too conservative. But this is what I'm looking at to give me a clue as to when to perhaps start to get cautious. So I'm on the 2-week chart now. We'll take a look at the monthly chart, maybe the 3-week chart. Still, the RSI is printing lower highs. So that's not good. We're moving to higher highs in price, and we're still printing lower highs in the RSI on very high time frames. We really need for the 2-week chart to push above 76 and then above 80. That's when some crazy momentum to the upside, I think, can take place. But we're a long way away from that. The price of Bitcoin could double between this RSI reading of 68 and just to get up to 80. And then we have this other trend line to deal with. So I'm still looking for a timing November-ish, October, November of a top. And I am going to be watching these high time frame RSIs to start to get cautious. I do think it's possible this bull market extends into 2026. And that is due to these 2 super long consolidations that we've had. This might be the first time we're not going to see a cycle top in Q4 of the post-halving year. But for now, I'm still sticking with maybe an October, November-ish top. If I go to the 3-week chart RSI, I got to adjust these a little bit. We just have these peaks that the market tops. I don't really need this right now. Have not been able to push through in the last 2 bull markets. So again, I will be watching. This is the 3-week RSI around 74 to see if it can print a higher high above 76. And then I will start to look for some serious bullish momentum. And this is the most bullish thing to me that there is. Now, again, we do have this trend line. We will have to be cautious as this approaches another lower high around 72. I can fudge this a little bit to get more touches. 70, 72. However, if the monthly RSI can push through this trend line and start to print a higher high above 76, even just from 76 up to 80, where this is going to be a little bit of resistance, the price can double. Like just in that short amount of time. And for what happened back here, this is January 2021. From January 2021, from 80 to 89, let's see what the CME did. From January, okay, right here. Basically from 20, so check this out. This is really important to understand about these high time frame RSIs. Here it reached 80 when the price was, let me just be a little more conservative. Let's just call it $30,000. So from $30,000 to that top was a 110% move. The price doubled between monthly RSI at 80 up to the top at 88. Okay, we're currently looking at the RSI at 66. So if this market can somehow push above these lower highs and above 80, I'm telling you, that's when I start to get absolutely incredibly bullish. Now, there are some key Fibonacci numbers that I am looking at. I just got to find it really quick. Before I go there, let's just take a look at this pattern. I brought this up on prior streams. So if this curve holds, and I'm looking into December, let's just say late November, that is at $200,000 as the price just crawls up this curve right here. So again, that is kind of falling in line with my price doubling scenario into the end of the year. I really don't think that's unreasonable. But let me just show this. I believe I have MSFT highlighted. I do. So the reason I have this is because I've mentioned on prior streams that I see Bitcoin in a similar growth pattern to MSFT, Microsoft, and Berkshire Hathaway. And as we can see, Microsoft went into the secondary growth phase as the curve shifted. This is very, very rare to see in markets. And I have fudged this curve a little bit because I had it tighter. But I'm just going with a general view. And if I look at Berkshire, we're going to see the exact same pattern. Bitcoin is the only asset in the stock market that I have found that is following the secondary curve pattern. So if we look at Berkshire as it has crawled up this curve, and I go back to BTC, then let me just get stupid bullish for a minute. We could potentially look at a $1 million Bitcoin by 2028. What do you think on that, Tone? Yes or no?
I was muted. Yeah, no, that would be interesting, right? Because 2028 is also the next election.
Exactly.
So that would be the ending of Trump. And if someone like JD Vance is about to win the election, who's about to speak at the Bitcoin conference next week, that creates a massive boost for Bitcoin.
And it's also a halving event as well. Now, really quick, let's just check in with my 100-year hyperwave in the S&P, and I am seeing the S&P being in phase 4.5, which doesn't exist, and which actually allows the S&P to drop pretty far and still hold phase 4. However, if it continues on this pink trend line, I have this on the monthly chart. If in order to track 100 years, I had to track closes on the monthly chart. But this helps. So Trump's end of Trump's term would be 2028. If it continues to run up this curve or hold this trend line and be higher, that would be right. We would be looking at the S&P sitting somewhere up here, 7,000-8,000, which we talked about earlier, which I still think is very possible. When this collapses, it's not going to be good. I don't know. This could go on. This could go on for quite a while. But when it does drop, it is not going to be good. Now, here are the fibs, and then
I think it'll be fine because when it does drop, I just think that the reason for the drop is going to be the breakup of the United States, and it's just that some companies are going to be removed because they're going to be in a different place, right? So it's not like companies are going to zero. I just think the index would fall apart.
I think so too. Now, do you think that the dollar will hyperinflate as that's happening?
Probably.
I do too. I absolutely think that will happen. Okay, real quick, we'll take a look at this and then we'll call it a day, because this is my higher time frame look at Fibonacci's. Ever since the 15K lows, I have looked at 1.618 as inevitable. So crazy to think of price at $100,000 when it was sitting at 15,000. But once I felt very confident that these were the lows, which probably wasn't until maybe around 25,000, around March of 2023, I was already looking at $100,000. And so any buying opportunities down here in the 20Ks to me were absolutely golden. Now, for the market cycle top, based on diminishing returns, which maybe we can cover in another stream because I can't find that chart right now. I have always had my eye on the 2.618 because the markets have dropped to fib extension levels each top. They've dropped higher, lower, lower, and lower. 5.618, I think the last market topped in 3.618. So 156K has been and remains my base case conservative topping target. And if we are to match the last cycle's run, then we are looking back at the 3.618, 3.4414, which then does get us into the 200K price range, which could potentially break the diminishing returns pattern that we have seen. There are two other sets of fibs that we can look at for extensions. If I take the high from March, that's long 6-month consolidation, March 2024 at 75K down to 50K. We do get some other extensions that are looking at 140K for the 2.618, around 212K for the 3.618. And I'm going to add one more fib just to make it more confusing, taking these the current all-time high down to the lows. And as we can say, we can see, I'll zoom in, we're retracing that right now back to the 1. The 1.618 off of that fib is 135. I feel fairly confident that Bitcoin is going to the 1.618. And I feel that gold has told us this. I have a theory that gold has been leading Bitcoin, and Bitcoin is leading the stock market indexes. The Fibonacci levels that gold has, the extensions that gold has trended to, suggest Bitcoin gets pulled up to 135 and higher. And it suggests that the S&P is going to 6,400 once it finally breaches a new all-time high, and probably higher from there. So those are kind of like my extended view looks and price ranges. Do you have a specific price range, Tones, of things that you've looked at?
Well, in the short term, I'm looking at about 125, but I have all these targets in the 140, 150 range, and at least 200 before the cycle top.
At least 200 before the cycle top. Yeah, so I think you and I are kind of seeing things pretty similar there, and I don't have my notes on the things I was looking at the last week to help kind of prove that a price doubling is not unreasonable. I'm super conservative. Like I don't put out crazy numbers unless the TA is showing me the possibilities. And what I've been looking at in the last 2 or 3 weeks of different things, I might try to gather that for a stream a little bit later. I can show with a little bit more evidence and proof why I'm feeling like, at least doubling from 90K is not unreasonable. But I really even think that doubling from this 100K range is possible. It would be very helpful to see the market indexes once again above these. Let me get rid of this. Above these Fibonacci extensions, the 0.886. Why can't I delete this? Why do I even have that? There we go. So maybe just to take some notes I'm going to draw that. I'm going to draw that Fibonacci again on the S&P, and we'll do it for the NASDAQ, and then we'll call it a day. I'm connecting the highs to the lows. I'm going to do a full connection. Sometimes I will look at like daily or 2-day to see if I like that for now. And as we can see, this 886 fib is doing exactly what it's supposed to do, which is rejecting the price. So I would like to see the S&P above 6,000. Then let me put it on the NASDAQ. And the NASDAQ, I'm sure we're going to see rejection of the same Fibonacci, or close to it. Yeah. I'll draw a horizontal. It's like magic. Fibonacci's are market magic. They're everywhere. Boom. Literally to the dollar if I'm taking wick high to wick low. Rejection of the NASDAQ right at the 886. So I would like to see the NASDAQ above 21,500. And I'm not saying ticking above it. It actually needs to flip those levels to support. Once that happens, 90% probability that the NASDAQ and the S&P are going to do all-time highs. And once those are stable, then Bitcoin, I think, will have a little bit more confidence. But quite honestly, Bitcoin doesn't give a fuck right now. It's leading the market. It's leading these indexes. And it's going to pull them up to these levels regardless, in my opinion. So that's all I got for today, Tone. We got a new all-time high. Let's take a look at the daily chart really quick. Getting a bit of a shooting star. However, as mentioned before, it is a green 4 candle count on the daily, suggesting we could see another week of upside, which kind of times with some cycle timing stuff as well. However, this is going to be a tough wick now to take out. And what I've observed in the markets in general is the traders are going to sell these round numbers. They were selling 105,000. They were selling 106,000, 107,000. They sold 108,000. Today, the traders they front ran 110,000. I think this is going to get sold into several times until there's a few dips and momentum to push the price through there. So we shall see. Tone, really quick question, and let's wrap it up. Will we see the price higher than this current tick high 1.99 by next week, end of next week?
Yeah, I think so, because I'm looking at the MRI daily, right? And I really want us to get to that 9. And so I think we're going higher. I think we're gonna pull back from the 115 area, and then we're gonna fall to about 110.
Okay.
Sorry, not 110. Lower than 110, about 100. Like I think there'll be a proper pullback from the teens down to the somewhere between 98 and 102.
Yep. I can agree with that. And if things kind of get crazy, I could see a dip, maybe 95, 97. But I don't like giving opinions. Like, I'll give my opinion. I don't like giving ideas. Let me just say, Bitcoin printed a low here. Once the price started printing above around $102,000, I felt those were significant higher highs. So now, but this is a clear higher high because it's an all-time high. The next lower high, wherever that is potentially the last time, if you're looking to buy some spot Bitcoin and hold on to it for a while, to make that purchase, and you can just average in on a drop. You do not have to try to find it perfectly. Tone and I are suggesting somewhere between 92,000 and maybe 100,000. It's an $8,000 range. And I do believe that you can probably hold on to that position for a while and just let the momentum that is just starting to build. What I wanted to show today was the 8-day, the weekly, the 2-day, the 5-day. They're showing us early stages of upside momentum, not final stages. So I'm leaving this video with a pretty bullish vibe, but I am expecting a top maybe within the next week. Although, Tone, if we look at the MRI on weekly, we are on a green 5, which suggests.
Mark, I have to leave. We have to wrap this up.
I'm good. Let's call it a day.
All right, guys. Yeah, we had to wrap it up. Hope you guys enjoyed the show. Mark, thanks again for joining us, and we'll see you all. We may or may not do a show tomorrow with Matt McGregor, but we will bring you one more show by end of the week. And Mark, you going to Vegas by any chance?
I am not. I wish I
Okay.
was, but I am
So
not.
I will have to see you somewhere else sometime soon.
Absolutely.
All right. Hey, guys, we got Unconfiscatable coming up May 30th. So 1 week from tomorrow in Las Vegas. All right. Gotta go. Bye, guys.